Hi, this is Randy Finney with Right Side of the Chart, and this is a market wrap for Thursday, August 2nd, 2018. Let's go over what happened today and some of the things that happened, some of the things to watch for, and more importantly, what today was and what today wasn't. Um, Really, right now, to try to put my thoughts into words, we've pretty much pushed the upper limits of my bounce expectations, but we haven't exceeded them yet. I'm going to go over a couple charts. We're going to look at Fibonacci retracements, things like that. But as of now, uh, let me say this. Today's rally was very impressive, was impulsive. I've been talking about this bounce target zone that I had here. This morning, I slightly revised that middle level there. But either way, the box, the upper level there, about 72, what is that, 73.59.24, so we'll call it 73.60 down to about 27.89 or so. That 72.89, that's the bounce target zone. And so we've taken out the top of it, and I mentioned this before. This is going to prove to be either um, the beginning of a new leg up after the correction that came following this divergent high. And as I talked about, this was my near-term preferred swing target right here that was hit almost to the penny the other day. We had bullish divergence here on the NQ E-minis that we're looking at, the 60-minute chart. We had bullish divergence on the ES, even larger bullish divergences. I'll get to that in a second on the ES chart. I covered it this morning as well in the other update, midday update. Um, and so those divergences have played out. Now, the $1 million question is was this start and is it still the start of the next leg up on the way to new highs, or is it just a counter trend rally in a larger corrective wave with more downside to come? This being, here, let me use another line here, this being the first leg down, this being a counter trend rally, and then coming back down here to this next potential target zone. That's the $1 million question. And can't answer today. I haven't seen enough. Like I said, this pushed the upper thresholds of my bounce targets. I mentioned personally wanting, one idea, and what I did is scaled in here, but I mentioned I wouldn't be prudent to add above that level. I was allowing for, and still am, a little pop above there. What I'm targeting myself, I'm looking at these highs right here. Let me try to hit those a little more accurately. Those recent reaction highs right back here. And that's about where we pushed today. The NQ is built on the gains after the close a little bit. And this is a chart of the NQ. So that's what we're looking at. So we're at the upper end of that range. And I can just say this. I'll keep it simple. Tomorrow or by early next week, I'm pretty sure we'll have a good idea. We could consolidate here, maybe set up a bull flag pattern, and that could last a day or two. That really wouldn't tell us anything. But if one of two other things happen besides that, either we fade these gains, um, part or a good deal of those gains tomorrow. And I can say this, I don't expect this by any means to happen, but if we faded all of these gains tomorrow by Monday, all of today's moves, especially here in the NQ, it's going to show a little different on QQQ. That would be very, very bearish in my opinion, and open the door for probably a waterfall sell-off if we took that out quickly. Again, not my preferred scenario. It's just not enough that I see in the charts. Not a lot of market moving catalysts out there that, at least on the horizon. But that's what I'm looking for. And if we build on these gains, that's going to be pretty darn bullish. It'll pretty much seal the deal. Why is that? Well, we'll get to ES in a second. Let me look at the QQQ chart and SPY and talk about retracements. Here's a 15-minute chart of SPY. For those of you not familiar, I recommend to Google the term Fibonacci retracements, learn about Fibonacci levels, the Fibonacci sequence. It's amazing how well these things work, and the retracements are used to gauge a counter trend, where a counter trend bounce or a counter trend, yeah, counter trend bounce during a corrective phase might go. Or on the flip side, if you're in a downtrend, I'm sorry, if you're in an uptrend, you can look for pullbacks by doing these in reverse. So what does this show us here? Well, here's the move off. You take these Fibonacci's, you put them on the recent high right there, which I have, and then you pull a line down to the bottom. I'm just keeping this straight line out of the way. So you can see here, I'm capturing with the numbers this recent high right here and the low that we put in today, I guess, at the open. So there it is. We came up, and there are other levels. There's a 78.6 level, another one up there. And these aren't be all end all levels, but they tend to be. This is the sweet spot, or the common range, if you will, for a counter trend bounce usually goes, or a counter trend rally, or correction, I should say, whichever direction you're looking at, usually ranges between the 32.8 up to about the 61.8 Fibonacci retracement level. And you can see we stopped cold, not only once, but twice today, right at that level. And that is exactly where they parked the SPY today. Now we take a look at QQQ, and as impressive as that bounce was today, exactly on the 61.8% retracement. Now, I'm not talking the pennies. I don't, my tool doesn't auto snap. Some tools will auto snap to that line, but you can see I placed the line right there at the highs on QQQ the other day down to the lows that we had, and there it is. Closed right on there. In fact, we stopped earlier, like as with SPY, and closed there. So what does that mean? If we go tomorrow, if we pop above it, does that mean that we cannot possibly reverse and continue this downtrend? No, no, no. Just means that is a normal, typical stopping point for a counter trend rally. And that's it. So it sort of aligns with the analysis again that I was just talking about now. Same analysis I talked about recently on the NQ chart, being the upper end of my bounce target range. And if you are short, my suggestion was not to add above here. Now you just wait and see. And if we go much above today's highs, and it just diminishes. It starts to significantly diminish the chances that this is a counter trend rally with another big leg to come down. That doesn't mean we can't dip. We're not going to go straight up like this again, not for 2 or 3 more days. It's going to zig and zag, so there'll be a little pullback. So, all right, enough on that. Let's just see what happens tomorrow, so that we're kind of parked at where it could go either way. Would have been preferable, obviously, to see if you're short or bearish and looking for another leg down, it would have been preferable to see the market reverse at, the 38 or 50% fib level, or at the top of this level that it failed at so many times. But that's that. It's not the case for more downside is not completely over yet. And so here it is, ES. You can see coming up on this pretty significant level here at 28.33. We're not there yet. It's not super well defined, but there are a few reactions. You can see them there. It's not an arbitrary line. We have a reaction from above, a bunch of reactions from below there, and then a breakdown. Impulsive went on to break that trend line. We just popped slightly above these previous highs. So again, I have to give today, if you want to speak in absolutes, I will say today's price action is bullish, but it's not. It didn't completely eliminate the bearish scenario. Now, the other things I've mentioned, we had a small divergent low in the NQ and ES at this low here, and that led to that first pop. ES, the S&P 500 E-mini futures, which we're looking at here on a 60-minute time frame, put an even larger divergent low. In fact, that divergent low now was about comparable to this divergent low back here in late June, which led to this big old advance. So the potential is certainly there to open the door to new highs from this rally. And again, this movie will be continued tomorrow and maybe into Monday. We'll see what happens there. Okay, and let's not forget on QQQ daily chart, what happened here. Again, this was covered in today's video. This is the uptrend line, the near-term uptrend line off the lows in early April. And so far, just a reaction. We've held support, but we're still wedging higher. There's still negative divergences in place. There's today's candle. I'm sure you've heard about the bullish engulfing candle, and you have to take them on face value for what they are. But it's not unusual recently to see bullish engulfing candles, and I'll tell you what. This candle, remember I had just showed you on NQ that rip, how it paralleled that recent dip. Well, look at today's bullish engulfing candle and look at the previous candle and engulfs right here. So let's just look at these two. And of course, I'm not taking anything away from these, but let's look at these two here. We had an even more bearish engulfing candle with a very small, very similar candle. So this is just back to back. It's like watching a heavyweight fight they're slugging it out. Two big heavyweights. The Bears won here, but all we had is one more down day, and now the Bulls put in a virtually identical bullish pattern, but they're still below the highs. So again, take it on face value for what it's worth. That doesn't mean that a bullish engulfing candle isn't bullish anymore because it followed on the heels of the big bearish engulfing candle. It just means this market's been plagued with a lot of bullish and bearish candles recently and a lot of volatility and big moves. And again, you can see the size of this green candle and look at the red, a lot of red and green candles, not any smaller than this one in quite a few. This is just the new norm so far in 2018. I should say, take that back. Volatility abated for a little bit here, but you can see it's starting to expand now. Yeah, I'm talking just eyeball these candles, how tight these are compared to the candles in recent weeks. And this is what we had back here, a bunch of big candles, throughout late January all the way into really into early May there. Here's SPY. SPY put in, of course, also a bearish engulfing candle today. Similar, not as nearly as big as the one on QQQ, and that has to do with the overweighting on Apple and QQQ. It's also overweighted in SPY, but not nearly as much in percentage terms. And there's that bearish engulfing that we had just the other day. And that came, by the way, after a bullish engulfing. A bullish engulfing only has to engulf the previous body of the previous candle, not the entire candle, not the shadows, which is the skinny part there. So we had a bullish engulfing that did nothing, but was followed by a little red candle that was followed by a bearish engulfing. So now blah blah blah, bullish engulfing. There was a bullish engulfing here as well. So normally what you want to look for, what I would look for and pay more attention, give these more credence or weighting, is after a prolonged uptrend, especially one with lower volatility, and all of a sudden at that point you get a big bearish, or at the bottom of a downtrend, a big bullish engulfing candle, that's when I put a higher weighting for a reversal pattern. And then the other thing is I always say when I see a bullish any one day bullish candlestick, or in this case, technically it's a 2-day pattern with the previous candle being engulfed, but I look for follow-up. So for this to be validated, you need to see, at least in my opinion, another green candle and ideally two green candles afterwards. Here you had a bullish engulfing, but it didn't mean anything because the next day you closed red and then boom. So those are things I look for. And then the bigger picture too, you have when I look down here at the PPO, it's rolling over. It recently made a bearish cross, but so far things are flattening out because of today's price action. So with SPY, and I believe I pointed this out quite a bit recently, there's certainly potential right now for us to push up a little bit higher and then put in. We don't have negative divergence as we do on the QQQ daily and weekly charts, but we do have potential divergence because if I draw these divergence lines, see these indicators are lagging, meaning they're well below the highs that we had in January. So let's just draw a scenario like this where there's a little bit more upside. Draw a trend line right here. And I always say this, a lot of feedback on divergence, especially on the YouTube channel. I don't always monitor that channel. I can't reply to all the comments on there, but divergences are not the be all end all. They're just an indication that a reversal is likely. And so that shows a scenario that if we do pop the new highs on the SPY, you can be guaranteed they'll be parading that out on TV, CNBC, and Bloomberg and all those channels. But if we do, it's going to be a divergent high. And I have a rule for the most part. I do not chase breakouts to new highs if they're a divergent high. Otherwise, a breakout to new highs is bullish because everybody at that point in time is profitable. If you're at a stock or an index at all-time highs, nobody is underwater at that point. Just like to break to all-time lows, everybody's underwater, and that's why that's bearish on face value. So there it is. There's my analysis, and that's all. This stuff we'll get into next week. We're not going to have any resolution here tomorrow. So for now, let's just see what SPY and the Nasdaq 100 do tomorrow. We'll watch those 60-minute charts. There it is. There's that recent divergent high, and this kind of also plays into what I was talking about. When I look at this, we had a pretty healthy correction. Remember, I went over the fact that the Nasdaq 100 corrected all the way down to this basing pattern that we had here in late June, early July, where the S&P 500 didn't even come close. In fact, the S&P 500 simply made this was a previous high, another attempt, broke out the new highs right here. And so far, we have a successful back test, several successful back tests of that breakout to new highs. So there's your glass half full thing. You can see the PPO crossing back up. We're holding right above the zero line. That's an indicator I like to use at 9 EMA. So I'm giving check marks here in the bullish side, but need to see. I need to see another day or two of trading action to really firm up my opinion here. And when I look at the divergent high on the 60-minute chart in this rising wedge, this was a very small correction in SPY, and that's face value bullish if we continue to go up. But my concern is it leg, the first leg down, is this a counter trend right now? Is this leg one down, wave one, and a counter trend rally with more to come, like we had here, or not? We'll see. And again, I think we'll have a good idea tomorrow. I can certainly, I can make almost equal odds on it, and that's why you just don't. I'm not going betting anything hard right now at this point because I think we're at an inflection point. We can go either way. So I will make sure to do an update with a lot going on in the markets now and all these critical junctures. I'll do an update tomorrow, at least no later than after the market closes, and maybe something over the weekend. And for members of the site, I put out the video today on the long trade ideas. It was probably a dozen or more names. I have some shorts I'm gonna plan to add as well. Put those on as unofficial trade ideas, and any that stand out, I'll put on some official trade ideas with price targets and all the other parameters for the trade. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.